Namaste. The government of India has recently caused to set up a bad bank. Is it a bad bank as its name suggests? No, things shouldn't be judged by their names. A doctor treating insane is of a sound mind. So is a crime branch police officer. They are not criminals, they are good people investigating the crime. So the bad bank has been set up to deal with the bad loans of the banks. So it is a good bank. But how good is this bank? How effective it is going to be? We need to know the details about the bank. What is the bad bank? The finance minister in the current year's budget speech, that is 2021-22, announced the setting up of a bad bank to deal with the bad loans, the piling up non-performing assets in the banking system. To take forward its announcement, the government has caused to incorporate the bad bank on July 7, 2021. That was incorporated under Companies Act, the National Asset Reconstruction Company Limited. In tandem came India Debt Resolution Company Limited, IDRCL, the service company which manages the bad loans acquired by the NARCL. So the NARCL together with IDRCL may be known as bad bank. While the bank was set up under Companies Act on July 7, 2021, the Reserve Bank of India registered it as an asset reconstruction company on October 4. What is the mechanism of the bad bank? The banks transfer their non-performing assets, the bad loans, to another entity, the bad bank. And the bad banks buys those assets. A small example to make the point clearer. Let's say there is a bank called ABC Bank. The ABC Bank has lent 1,000 crore rupees to a corporate borrower called DEF Company. But the DEF Company failed to pay the loan that it has taken from ABC Bank on time as per the terms of the borrowing. Then the loan has become NPA, a bad loan. When it becomes a bad loan, the ABC transfers this to the bad bank, these 1,000 crore rupees. When it transfers these 1,000 crore rupees, the bad bank pays back to ABC Bank not full 1,000 crore rupees, some negotiated amount. That is, say, about 15% of it, which is equal to 150 crore in the given example. The bank, which was not expecting any amount from the bad loan, which it has written off on its books of account, is happy with whatever it gets. So 150 crore is a profit to it because 1,000 crore rupees was the loss to it, which it has already written off. And how this NARCL is going to function? Exactly on these lines. The public sector banks themselves own the NARCL with 51% shareholding. So in a way it is their own bank. Another wing. As we said, the non-performing assets have been piling up in the bank. As of March 2021, the quantum of non-performing assets, the bad loans of the banks, were 8.35 lakh crore. 77.9% of these loans belong to the corporates, big borrowers. And as of March 2022, the non-performing assets are likely to further escalate to 11 lakh crore rupees. The recent Financial Stability Report of Reserve Bank of India, released in July 2021, says that the gross non-performing assets of the scheduled commercial banks is equal to 7.48% as of March 2021. And they are likely to go up to 9.80% by March 2022 under baseline scenario. If nothing changes, but under stress scenario, the non-performing assets are likely to swell to 11.22% of the bank loans. One thing we should understand here, the banks do business with the public money. Be it a public sector bank or a private sector bank, The money, the deposits in the bank belong to the people, the savings of the people. They are doing business with this money. When the loans given out of these savings become bad, that affects the depositors. Not only the depositors, the economy as a whole. So it is very important to ensure that the banks do not allow their loans to become bad. But that is happening, unfortunately. Now, how this NARCL is going to function? Knowing a little about what is design and what actually happening will further clarify the point. The NARCL is going to take up 2 lakh crore non-performing assets of the banks, and the government is going to give 30,600 crore worth security receipts, a guarantee from the government side to pay to the banks if the bad bank NARCL doesn't pay within 5 years. Then upfront, the bad bank, the so-called bad bank NARCL is going to pay 5,400 rupees. So the math is simple. 30,600 crore SRs from the government, 5,400 crore from the bad bank. Together, this amounts to 36,000 crore rupees. What proportion of 36,000 crore rupees in 2 lakh crore rupees non-performing assets? 18%, which means finally banks are not going to get more than 18% of their non-performing assets through this mechanism. The experience before is no better. Professor C.P. Chandrasekhar quotes one example of Videocon industry lined up for resolution. The loans given to the Videocon industry by the banks, 35,000 crore rupees. And this is going to be taken over by Twin Star Technology of Vedanta Group. Paying how much? 2,962 crore against 35,000 crore rupees outstanding loan of the banks, which means the Vedanta Group is paying 4.15% of the outstanding loan, taking over Videocon's loan from the banks. That means banks are losing 95.85%. 95.85% haircut. So what is going to happen to the NPAs after the setting up of this bad bank? The bank employees and their organizations say that this is going to be any better. It is not for the benefit of the banks nor for the economy. They say it is only to accommodate the corporates. One corporation takes loans from the bank, evades the payment, then the other corporate comes forward and takes that loan at a throwaway price. Like one corporate taking loan of 100 crore and paying 15 crore, another corporate house takes the loan. This way, it's going to help the corporate sector. The unethical part of the corporate sector is going to benefit what the bank associations say. The Bank Employees Federation of India, for example, said that the government of India is boasting about the recovery of 5 lakh crore non-performing assets during last 6 years. But it says that as high as 10.83 lakh crore rupees written off during this time hasn't been mentioned. So several earlier measures of the government of India did not yield any good results. The Insolvency and Bankruptcy Code IBC, the Bank Employees Federation of India again says that 396 cases were resolved till June involving 6.82 lakh crore, but out of this banks could get only 2.45 lakh crore. That means there was 64% writing off of the loans of the corporate sector by the banks through this IBC mechanism. And one public sector banker also says, as per a press note given by the Bank Employees Federation of India, that there had been 95% haircut in one particular case. The example given is the outstanding loan against Jet Airways was 7,807 crore rupees, of which the lender could recover only 385 crore rupees, 95% loss. A huge amount of corporate debt is under stress. The KV Kamath Committee, which has been set up to help the Reserve Bank of India to design the one-time settlement, said that the corporate debt under stress due to COVID was 15.52 lakh crore. And even before that, the corporate debt under stress was 22.20 lakh crore. Together, the corporate debt under stress adds up to 37.722 lakh crore. That is equal to 72% of bank credit to industry, or 37% of total bank non-food credit. So this data of the employees can't be poo-pooed. After all, they are the employees of the bank. They are the insiders. They know what is happening there. Although the decision is not of the employees to give these loans. So this bad bank or the asset reconstruction company is not a new idea in the country. There have been suggestions for the past 30 years, ever since the reforms have been taken up in the country. The Narasimham Committee of 1991 suggested, though not directly, to set up a bad bank. It made hints for hiving off of the bad loans from the bank and to have an establishment to deal with them separately. Then the Narasimham Committee, 1998, same Narasimham, there was another committee on financial sector reforms, that too suggested. And then the Andharujina Committee of 1999 suggested for an asset reconstruction company. Whatever the suggestions and recommendations and the acceptance or non-acceptance by the government at the given point in time, the first asset reconstruction company was established in the country in 2004. 2004, Reserve Bank of India has given license as an asset reconstruction company to Asset Reconstruction Company of India Limited. Now we have 28 asset reconstruction companies with 5.2 lakh crore rupees assets under management. But what did these asset reconstruction companies in the private sector do? The Reserve Bank of India's Committee on Asset Reconstruction Companies report as recently as in September 2021 said that their performance hadn't been encouraging. It says only 14.29% of the outstanding non-performing assets transferred to these companies could be recovered by the banks. And more worrisome, the Reserve Bank's committee says that the asset reconstruction company's efforts did not lead to the reconstruction of the assets, revival of the business to an extent of 80% of the cases that they have dealt with. So ARC's experience hasn't been of any satisfaction. Then the other measures of the government were also not very encouraging. That is the reason why the government has been coming up with the newer measures as their earlier measures failed. The first concern the government has shown through a legislative measure was when it passed the Sikh Industries Companies Act 1985, SICA. But it did not take long to find that it was of no benefit. That was not effective. The Board of Industrial and Financial Reconstruction was not of any help. And finally, the SICA was repealed in 2003. Then the Insolvency and Bankruptcy Code, we have already discussed about it. It hasn't been very effective. IBC 2016. Then the SARFAESI Act of 2002. Securitization and Reconstruction of Financial Assets and the Enforcement of Security Interest Act 2002. Of course, the ARCC is also part of the SARFAESI Act. So now you can say whether the bad bank is really good. Is it going to be a better organization to recover the bad loans of the bank? But if all the governmental efforts are not yielding the desired results, what does it suggest? The government is not going to the root causes of the malady. What is it? The bank should identify the correct borrowers, follow the prudent norms, should ensure adequate security against the loans that they are giving to the big corporate houses, because after all they are dealing with the public money, and there should be a regular follow-up of the loans that banks give, and there should be effective machinery, legal framework to recover the bad loans. Only then the non-performing assets do not pile up as it is happening now. So let us hope the government will focus on the root causes and take effective steps to safeguard the bank's interest, the depositors' interest, and the public interest. Thank you for watching my video. Please subscribe to this channel if you haven't done it already. Please click on that subscribe button below. After that, don't forget to click on the bell icon to get the notifications as and when I upload a fresh video to this channel. Thank you.